Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 15th day of July, 2020, and this is the daily report for gold and silver. We have gold trading at approximately $8.14, putting it up about $1 on the day. Silver has moved dramatically higher, gaining about 1.5%. The precious metals complex as a whole has been absolutely stable. And on today's show, we're really going to discuss the manner in which we have seen gold rise in this most recent rally, because I think it is in a very orderly manner that indicates higher pricing ahead. We'll talk about that during our technical studies, but first, to the price board. We had a mixed bag in the precious metals markets, with gold pricing remaining in essence unchanged, and sizable moves in silver, palladium, and platinum. Gold, basis the most active August contract, is currently down 50 cents at $1,812.90. When we look at October gold, because that's the next contract month that will become the most active, 1825, down 50 cents on the day, and then spot gold, in essence unchanged at 1808. However, the same cannot be said for the other precious metals. Platinum gained almost a full percentage point, 844.50. Palladium also gained almost a full percentage point at $2,004. Lastly, silver gained 1.4%, a net gain of 27.5 cents, taking it within striking distance of $20 per ounce, with a close of $19.80.5 on the day. On today's show, I do want to focus on both gold and silver, and also bring in a ETF, which is SLV, because silver has absolutely been on fire, gaining approximately 1.5% in trading today. We're looking at a daily chart of gold, currently trading at $813.50. You can see that is this little mark right here, which means that it is open and is currently trading in Australia. However, in terms of today's move, we did see the market close higher than the open, and we had a higher high and a higher low than the previous day. But I believe what's most important when we look at this chart is that we've had a slow and methodical rise in reference to how gold pricing acted immediately following a spike to higher pricing. The first instance of gold prices trading in a sideways trading pattern occurred immediately following the spike of mid-March, and that was in response to the global pandemic. And what happened is we saw gold trade up to 1788, that's this high here, and then trade in a range-bound manner between 1675 on the low and 1750 on the high. And that, to me, is a market that is consolidating, and it is a good sign, because the way we have seen gold spike to higher pricing is a series of consolidations, and that's followed by a spike to higher pricing, and then we get the next period of consolidation. That occurred right here as the market challenged 1800 but was unable to effectively close above it. That all changed on Tuesday of last week when we saw gold trade and close effectively above 1800, the first time since November of 2011. So the fact that we are now seeing the market back in a range-bound manner, trading sideways, and effectively having consistent closes above 1800 is extremely bullish to me, because my belief is if you would have seen gold rise parabolically, as we almost saw in March, we get a tremendous fall. When the market is trading for a prolonged period of time and moving to higher pricing, in many occasions does it in this manner. And that's why I remain extremely bullish on gold. My long-term projection is still to reach the all-time highs at 1920. The question is, how will that rally unfold? For the meantime, my recommendation is to maintain long positions in gold futures, gold forex, as well as the EFTs, GLD, and Nugget. Silver continues its dramatic rally, which really began when market forces took the precious white metal under $12 briefly in April of this year. We have seen the market move from 12 to approximately $20 and $8 gain in the last couple of months. This is a 2-week chart. I'm using it so that we can fit in this entire data set that we are using for our Fibonacci retracement, beginning at $21.25 down to these lows just below $12. Look at the 23% retracement that occurs at $19.06. We can see effective areas where the market tried to challenge that price point and was unsuccessful on each and every occasion except one spike that occurred back in the first week of July. So for those that are trading silver futures, obviously my recommendation is to maintain those longs, but I do want to suggest SLV as an ETF that all of our traders might want to consider. This is a chart of SLV, the iShares Silver Trust. It is a 2-week chart. We can see a slow and methodical correction occurring at the same time that gold hit a bottom. However, silver really traded sideways at that point until it hit these lows just recently at $12 and just below. And then over the next 2 months, we have seen it rise from approximately $12.50 to where it's currently trading at $8.17 per share. Now, we can really see this when we convert this into a daily chart in terms of what we have seen recently. I like to use weekly charts, but you can see that over the month of June, it traded sideways. At the beginning of July, it started trading from about $16.50 to $18.17, surpassing this former top. Although the best way to look at it is in a weekly chart, in terms of the upside that I believe we could see $20 to $21 based on the fact that each share represents 1 ounce of silver, and I believe that we definitely could see silver run to $20 and above. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.